Hey everyone, this is Ed Kime, CEO over at Quantcha, and welcome to week 4 of the Quantcha Challenge. It's May 22nd, 2015, around 1 p.m. Eastern, and let's step in and take a look at our opening portfolio. It's been a pretty volatile week. We've had a lot of movement. Virtually every day, each of these stocks has gone up and down, so there hasn't really been any great movement in either direction for us, but that's fine because we are working heavily off burning off implied volatility as in a lot of these investments. So, this week we are not closing any positions, although we are planning for our Las Vegas Sands bearish trade to expire. It looks like it should be fully profitable, which is a nice return for us. And we are looking at another position next week, which is going to be the Cirrus Logic position. We'll see where that's going to go. So far, that one's looking profitable, and so we're hoping to maybe eke out a little bit more money over the next week. The portfolio itself has edged down this week. We are at a slight loss now. We had been up about 4% on a last price basis. The good news is that most of the stocks that we are in right now are moving in the direction we want. There's a couple that are a little bit outside of our range, but we're holding on for mostly at this point these June expirations, and so things are looking pretty positive at this stage. And so edging up or down, I mean, this is just the nature of investing, and especially when you're working with options and things are so leveraged, you see lots of big jumps. But in our case, at this point, we're effectively at break even, but things are very promising. So let's take a look at what Zacks has picked as the bull of the day for today. It is Anthem, a healthcare provider. This is a very interesting place because this sector itself doesn't typically have a lot of clearing away winners, and so Zacks is pretty bullish on the space in general because there's a lot of strength there, a lot of positive things to be said, and you can check out the full review over at Zacks.com. The key thing for Anthem is that 14 analysts have revised their earnings estimates upward for the current year recently. This is pretty substantial because in this industry it is a very mature space, and so when the consensus estimates are driven up by 20 cents to about $10.05 for the current year, that's a pretty significant thing to take notice of. And so as a result of all this positive movement and positive sentiment, Zacks has raised the stock itself from a rank number 2, which is a buy, to number 1, which is a strong buy, and selected it as today's bull of the day. So let's head on over to Quantcha to see if we can find a great options trade to express our bullish sentiment on Anthem. So we're going to plug Anthem in here and take a look, and we can see the first thing we see is the implied volatility grows over time. The chart here, of course, is showing that there's less concern in the near term about significant movement in the stock than there is after earnings. So clearly we've got some runway here to work with. We're probably going to want to go with one of these expirations further down if we're going to be working with a credit trade, which is pretty likely from how a lot of the trades have been shaking out lately. A couple things to note. One is earnings is well beyond the expiration period we're working with. In this case, we're trying to keep things within the June 26th timeframe, so it's just the first 5 expirations we've got here. And there's also a dividend that'll be coming out, which is right between the June 5th and the June 12th expirations, which is more specifically, we can come down here and get an idea. It's on June 8th. So I think what we'll probably want to do here is let's go out to the 26th and just take a look and see what sort of trades there are, things that might work with us here. Now, we are going to be bullish on the stock, but we're going to go moderately bullish. We're not going to be too aggressive. It looks like that the numbers are interesting here. The put break even down about 4%, the call break even up about 2.5%, with an implied volatility in the 18-19 range. That just means that there's not a lot of major movement expected. So it's probably good for us to look at this expiration that's as far out as possible and get a feel for it. We'll keep $1,000 as the budget we're working with, and of course our Tradier brokerage account was where we'll be placing these trades. And we can see a bunch of trades come up and things have been resets from last week. So I'm going to go ahead and just get back into my favorite default settings, which are to say at least a positive return or at least break even within my forecast range on the model, and then to exclude the range bound strategies. And so we're looking at some interesting trade ideas here. I'm actually going to go ahead and just sort this based on the highest potential because I'd like to see what we have here ordered by this potential number to see if we can make some nice earnings on what seems to be a pretty positive call on this stock. So we can see here there's a 60% return potential, which really means that since we're basically break even at the money, so if the stock stays flat, accounting for the dividend, which you'll note here, this flat move here does account for that dividend. So if we are staying flat, at least moving up, there's room for profit. And it looks like really just around the one, in this case the 167.50 mark would be full profit. So that's not even looking for a huge jump in order to get that 60% return. But I also want to take a look and take a step back because some of the liquidity is a lot better at the monthly option. And so if we go back to the 19th, and again I'm going to select that I'm moderately bullish for this expiration as well, and we can get an idea for some other trades here, and we can see that really the return, even at the highest potential, is much better in this time frame. It's virtually the same, that 59.5 versus the 60, but in this case the minimum return is also much better too, meaning that the break-even point, if we click through on this particular trade, this bull put spread, we could see that the break-even is going to be below the money, so we have a little bit of room to even have the stock kind of fluctuate downward, and our profit density chart looks a lot nicer. Still going to see a little bit more loss potential here, but at least the upside potential is a little better, and we get a skew that kind of, doesn't go down, it kind of curves up a little bit. So all this is kind of looking pretty good for us. I think that this is probably something we could probably move forward with. I think as is, we'll keep the $1,000 budget. We'll work with Trader here. And so we're expecting a total liability for the legs to be 936 with the expected commissions at 940. Looks good. So let's go out there and go ahead and place this bull put spread. We're going to go to market order, set the duration to be for the day. I'm going to preview the order. And it's in line with the numbers we were expecting here. And I'm just going to go ahead and submit the order. And so we will open up our bullish position on Anthem. We'll give that a second to fill here just so we make sure there's no problems and we get set up with our stock. So here we go, filled at 190. And now on the other side of the coin, let's take a look at Zacks' bear of the day, which is Keurig Green Mountain. Keurig is a fairly famous and controversial company as of late. They make coffee products, and there have been concerns about recent product launches. Some of the products that are going to market, there's high price points, there's concerns about some of the proprietary technology involved, and some concerns about customer retention and satisfaction overall. But one of the most significant things from an investor's point of view is that the consensus estimates have dropped from $1.10 down to 79 cents a share in the past 30 days. That kind of massive fallout obviously has a significant impact on the value of the stock itself, which has been seeing some very bearish trending. But in addition, they've also missed their past two earnings estimates, which of course is not a good sign if you are an investor who has a long view on the stock. So let's step back into Quantcha and pick up where we left off to see if we can find a great options trade to express our bearish sentiment on Keurig. So we can see from the IV chart here that Keurig, it looks like the volatility is remaining relatively low until we hit earnings, and then it's swooping upwards, and then the volatility after earnings is significantly high, which, considering earnings is about 75 days out, is kind of a sign that there's not a lot of news or information expected that'll really impact the stock in the near term. Then again, the stock's also been taking a beating over the last 2 months, as we can see here, and this 91 point shows us that the 52-week range, it's really trading right at the bottom of the 52-week range. So since we are trading from a bearish perspective and the stock's already kind of given up a lot of its ground, what we probably want to look at with the volatility staying relatively low or consistent versus the after earnings volatility for way down the road, we'll probably want to go towards the end of our time frame, which is this June 26th expiration. And you can also see that we've got this ex-dividend happening that day. We can come down here and see it's actually June 26th. The dividend's not too significant, and since we are going from a bearish perspective, it's actually good to get the dividend in our favor. It'll kind of edge the stock downward a little bit. So if we take the range that we work with, we'll pick a moderately bearish range, and this gives us an idea of where the stock could go if it edges downward as expected. And we can see that there's some pretty good trades here. We are working with our previous setup, so we've got the minimum return set to 0. We're not looking at range-bound strategies. So these are all just bearish spreads and trades that will push downward. And we can see that we've got the best trade from an average point of view is this 90-93 bear call spread. And this is a pretty good trade to look at, but one of the concerns that I have is the liquidity hasn't been great on a lot of the options we've been trading for the expirations that are outside the monthlies. And in this case, we're looking at a weekly. So if we check to exclude the illiquid options, remember we're dealing with about a 67% potential return and a 63% average return for this trade. So if we check to exclude the illiquid options, we can see everything kind of gets wiped out here. So there's really, it looks like no liquid options, meaning that the bid and the ask are within 5% of each other. So let's step back 1 week into the June 19th monthly options. And again, select that we're looking at a moderately bearish outlook on the stock. And now we can see that even though we've got the liquid options, there's still a bunch of opportunities. And these trade returns for a week earlier are really within line for what we're looking at in terms of the overall trade. And in fact, what's actually pretty nice about this is even already in the money as far as we're concerned, because we can see that if the stock stays flat, we're still looking at a nice return. So to kind of recap the position we're in, we moved back 1 week, so a sooner time frame. We're still bearish on the stock, but we have a better minimum return. The potential and average are basically in line with where we were. So this is almost universally a better trade to make right now versus the one that was a week later. And so I think that really this is the best trade we're gonna probably keep an eye on for now. We'll just take a quick look through some of the fundamentals. I mean, the earnings date, as we know, is after, and so is the ex-dividend date. The options all have sufficient liquidity, which is great. So if we do have to get out of it early, we're not going to pay as much of a penalty. Now the price range is unlikely, but that is because we are looking at a directional trade here. And so we won't expect that to be ever really above 50%. And the average probable return is negative, but the probable return is really based on the likelihood of the stock going up as well. So in a directional trade, again, it's a little tricky to get this to be positive. And finally, the trade appears likely to be profitable, which means that for all the different possible outcomes for the underlyings, if you took them and you look at which were profitable and which weren't, more of them are profitable than not as far as we're concerned. So this looks like a pretty good trade for us to get into. I mean, the obviously very good for our model, but even outside the model, the full implied range, we can see that as long as we kind of keep it on the bearish side, we're going to do well in this trade. And I think that this is probably the trade we're going to want to move forward with. So let's go ahead and click through to place the trade. So here we are over on our Trader brokerage dashboard. We're going to select market and day and preview what's available for the pricing. We can see that since we're getting into a position here that is actually, it is bearish, but it's a bearish debit trade, so we are opening up the entire position from our cash here. It's a little bit over our $1,000 budget. The market pricing is a little different based on what we were looking at over in Quantcha, and so but that's to be expected. So we'll just go ahead and we're going to open this market as we've done with all the other trades, and we'll give it a couple seconds here. There's a lot of options to be filled, so once we get filled here, we can see it got filled at 81, which is pretty good. And so now we have our portfolio for ending the week. And so there you have it. Here's our closing portfolio. As mentioned, we now have positions in 8 different stocks. We've got 4 bulls and 4 bears. We are expecting our Las Vegas Sands position to expire later today. It's looking very likely at this point. And the only thing we have up for next week in terms of expiration is the Cirrus Logic trade. But we will be back next week for another bull and bear of the day, and hopefully we'll be able to see some nice upward movement in the portfolio. Thanks again for tuning in, and if you've got any questions or feedback, please hit us up at hello@quantcha.com or post a comment down in the comment section. Thanks and happy trading.